Hey guys, how's it going? It's Philip with Trade Genius. So wanted to talk about the announcement that the Chicago Mercantile Exchange did on October 31st, announcing that they were going to start doing Bitcoin futures contracts. So wanted to go over what that was exactly and the impacts for Bitcoin. So what are futures? Well, futures are a contract that, say for example, if you were buying a commodity like say corn, you would buy a futures contract if you wanted to lock in a price at a future date. So every quarter or every so many months, depending on what you're trading, you'll have a futures contract that expires at the end of a particular month. So if you wanted to lock in a price for a particular product at a particular time, you could do it with futures. And sometimes they do that where they can't afford to have any more price increases, so they'll buy a futures contract for a said commodity like corn or something else, and they'll lock in that price. So futures have a kind of a nice way to hedge against cost increases and things like that. So that being said, they've announced these future contracts for Bitcoin. So what that means is the Bitcoin price, futures generally trade a little bit above where the actual index is. So for example, on the S&P 500, they have what's called the ES futures, which is simply just the futures for the S&P 500 index. And generally they trade a few points higher than the actual index, but they track pretty much exactly the same. So the same thing can be expected for when Bitcoin futures finally go live. And at this point, it looks like fourth quarter of this year, 2017. Some people have questions as far as, is this good for Bitcoin or is this bad? So let me just kind of go over how I view it and the realities of futures and their decision to have futures on Bitcoin. You know, basically it's a derivative, and most people that were trading for any length of time went through the '08 crash, and that was derivative driven, right? So there's inherent risks with getting over leveraged, and so as such we see the propensity for big crashes, and a lot of it can be fueled by derivatives. And Bitcoin futures, as with all futures, are a derivative. Now, what's different about Bitcoin futures versus, say, a commodity future like coin or anything else like that would be that it's cash settled. So, in other words, if you're going to take a futures contract out on Bitcoin and it expires, they're going to cash you out from where you entered when that contract is up. So you're not actually going to get physical delivery or a virtual digital delivery of Bitcoin. You're just going to get the cash difference. So if it was higher than when you bought it when it settles, then you get the difference. Or if it was lower, then you lose the money on the difference. You can also close the contract early. So it'll be a vehicle used for trading, speculative trading. It'll also be a vehicle used for hedge funds that are getting into the crypto space. You have to remember there's over 100 funds that have filed to get into crypto. So there's a lot of money on the sidelines that is still yet to flow into this Bitcoin space. By the CME doing what they did, they're basically giving a green light for those funds. And basically a lot of people online that were, especially from the Wall Street side, were saying that it was, you know, it wasn't a legitimate product, it was a Ponzi, this and that, really didn't understand the ecosystem. That basically just squashed a lot of those arguments, because if the CME is going to give you a futures contract, they've done their homework. They have the smartest guys in the room as far as what's going on in the realm of Wall Street, and so they've looked at it, and they know Bitcoin's a legitimate thing. So it does bring a legitimacy to Bitcoin that I think there was some skeptics that were out there. Just I think it squashed that whole topic to a certain extent. But back to the cash settlement stuff. So it's 100% synthetic. So being that it's cash settled, it's not really going to affect the actual Bitcoin. So if somebody loses a ton of money on a Bitcoin futures contract, it's not like there's going to be necessarily a forced liquidation in actual Bitcoin. So I think that's good, because the Bitcoin is so unique and there's such a limited amount. I don't think you could quite do a physically settled contract and have it settled in Bitcoin, because somebody could just, it would crash the market, or it would make it skyrocket. It would just be too volatile. There's just not enough supply out there to do that. So I think cash settle is probably the way to go. And if they get over levered, it's not necessarily going to impact the actual Bitcoin market. It could, but I think this is a better approach. So it'll allow these funds to hedge, right? So if they're long Bitcoin, but they want to have maybe a short position on for insurance in case there's a pullback, then they can hedge their positions that way. So this is now going to allow, I think it's going to give the funds a lot more flexibility, and it's going to make, I think, lowers the barrier for entry for funds if they wanted to start getting into managing crypto, because now they can hedge it directly. So I think for the short term, I think this is going to be bullish for Bitcoin. Like I said, for various reasons. Basically, the CME saying or putting together a futures contract, that's something they don't do every day. That's kind of a big deal. So they did their homework on it, and I think if they saw that there was going to be influence from the feds or the government negatively on Bitcoin, I don't think they would have touched it with a 10-foot pole, because those guys have the inside track to that information. So I think as far as the next few years, I don't think that's going to be an issue at all. And I mean, you can take a look at the chart too. If you look at October 31st is when they announced it, and then it was this 1, 2, 3, 4, 5 big days of up. 6 we kind of topped out. We're pulling back now, but this kind of plays into the pre-fork activity too. So it was kind of putting gas on a fire that was already lit, because people are looking to consolidate into Bitcoin ahead of the fork, so that if there is the SegWit 2x fork, that way they'll get their allocation of SegWit 2x in case SegWit 2x takes off and becomes majority chain that's being mined, and that would be, most people would then at that point would refer to it as Bitcoin. Don't think that's going to be the case though at all. But people are just doing that for insurance reasons. So they want to get their allocation, or their airdrop, if you will, of SegWit 2x. But after that, it'll be back to mining. Focus will be back on Bitcoin for the most part. So anyway, there you have it. I think short term, very bullish for Bitcoin having the CME futures. There are inherent risks with futures, as with all derivatives. But that would, being that it's cash settled, not so much of an impact on the actual Bitcoin being traded. So hope that helps. That's my insight. And if you have any other questions, you feel free to drop us a question down below. Or if you'd like to join us in our crypto room, the links are below. And look forward to seeing you guys there. All right, guys, take care until next time.